when Anita was running the polls earlier, I saw some very interesting stats from the audience. For example, 56% of you said that you were you wanted to learn and understand about investments, investing in the community or in your businesses, and how to get investment. So this next conversation is really about that. It's about how it's investment time in Africa, how it's important to invest in Africa and in Africans living in Africa, and also how it's important for us to understand how we can be able to get investment. Our first speaker is incredible. I had the absolute pleasure of getting to know him when I was doing the Forbes 30 under 30 list in 2016. His name is Iyinoluwa Aboyeji. I'm sure many of you know him, you've heard of him. If you've heard about the businesses he's done, as a serial entrepreneur. You know, he is an incredible young man, just 30 years old, but he's raised money. More than that, he's been able now to invest in other youth. So who better to talk to us about how much we need to be investing on the continent and how to do that. Iyinoluwa is going to talk about talk to us rather about raising capital in Africa, the opportunities that we have available to us and the challenges. Please use the chat session to put on your questions, carry on the conversations down there. If you've got any questions, I'm going to be looking out throughout his conversation and his presentation, and I'll be able to put his questions to you. So please fire away, put your questions on there. Iyinoluwa, over to you.
Thank you so much. How are you doing today? Can you see me?
Very well, Ian.
Okay. Well, I'm trying to share my screen. I don't know if this is allowed. I would assume it is.
It
and
is.
then I'll just proceed right to the presentation I have here.
Perfect. There we go.
Okay. Awesome. Thank you so much. First of all, I'd like to thank the organizers for inviting me. It's such a pleasure to be here. Thank you for having me over. I know, you know, this is an event that a lot of African entrepreneurs look to attend every year, and it's definitely a pleasure to be able to present. So today, I hope I have the format right. I'm just going to talk very briefly about my own journey in investments, you know, raising capital in Africa, challenges, opportunities, and some practical advice. I think Ancillar did an amazing job of introducing me, so I'm gonna not repeat it. But generally, over the last decade, I've spent quite a bit of time building and investing in companies that are solving the continent's most difficult problems. We've been extremely lucky. Built Mandela, which is a pretty large company now, very focused on the talent space, as well as Flutterwave, which is a big company focused on the fintech space. So that's my background. I'm just going to talk very quickly. I'll talk about the challenges first. I'll talk about what the big gap with fundraising is today, just so you're aware of what the environment looks like, despite of all the amazing news that you're probably hearing and you're wondering what's going on, why can't I raise money for my startup? We'll talk about the opportunities that still need to be unlocked, and then I'll talk about some practical tips and what we're doing about it at Future Africa, and then hopefully we can have an amazing conversation with Fope right after, and then we can go. So challenges. Well, today you know, despite all the big funding rounds that you're hearing about today, I had a graph here that I'm not seeing, so I'm just assuming that maybe one or two things got missing in context. But every year, I'm sure all of you are hearing, like this year, for example, 1.2 billion has already been raised by African entrepreneurs. But one of the most difficult things that's not getting enough attention right now is that lower than 1% of those investments are going to seed stage startups. And that's really the biggest problem we have today. We have a lot of investments coming in, but most of these investments are still staying at the top of the market. Young entrepreneurs not getting the funding that they need to be able to start off. You have established companies perhaps having an easier time, but young startups, you know, that first 25 to 100K they need to just get started is really, really tough to come by. And essentially, I guess this is the graph, but it's just been somewhat swapped. But this is just a general sense of like how much has generally been raised every year. In 2015, I think we're looking at 277 million. And last year we had over $2 billion. But again, the problem really is that a shrinking proportion of this is going to seed stage. And the only way, and the reality is we're going to need more startups. We've got a lot of extremely skilled young people. We've got digital platforms popping up, with most countries going to public key infrastructure, going to build out identity infrastructure. You've got infrastructure getting better on the continent. They're going to land a lot more sea cables. We've got more devices. We've got more access. We've got, thanks to coronavirus, an insatiable desire to leverage technology. And naturally, there's going to be more entrepreneurs, right? More skilled labor, more entrepreneurs. And that's a good thing. But without the capital they need to build a decent business, that's not such a good thing, right? So again, this is why this is extremely important that we're able to solve this problem. And unfortunately, or fortunately, the only way to solve this problem is by raising local capital. Unfortunately, a lot of the capital coming into the continent is foreign capital. And so that has its constraints because it's risk averse, it wants to stay at the top of the funnel, it doesn't have a clear understanding of the problems. And so the only way that we are going to be able to engage funding startups at the early stages is by getting locals who understand the problems and the innovators to be able to fund earlier in the life cycle. And then the top of the funnel capital can come and ultimately relieve them, buy them, make them, their investments grow faster. But all the same, at the very earliest stages, there's still a need for more local capital. In Nigeria, which is where I live and which is where I do quite a bit of my work, although we invest at the Future Africa Fund across Africa, we've been doing quite a bit to unlock local capital for the earliest stage. Just recently, we realized that there's quite a bit of legislation in Nigeria that prevents African institutions from investing in early stage venture capital. So, we had to go and update our laws on banking and finance, basically allowing banks for the first time to invest up to 10% of their assets in venture capital. Now we're currently in the process of amending our country's Investment Securities and Pensions Act to make it easier to form venture capital. And not without paying ridiculous fees. Before, I think currently my country has an interesting law that says if you set up a local venture capital fund, you got to pay a percentage of your assets under management in fees to the government, which is crazy. So we have to repeal that law and put stuff back in. This year, I'm working very closely with the finance ministry to pass the new finance bill, and then we're advocating very closely for a law that incentivizes corporates and individuals to be able to get a tax rebate for angel investments or investments into local startups that they make. These are things that could help changing the laws. Second of all, encouraging the counter-funding of local fund managers who invariably will have to focus on local companies. I mean, naturally, as we all know, the world is in landscape, but thankfully, there are managers like myself and many others who are just focused on, say, a specific geography. Like I'm focused on Africa. I really don't do much outside of Africa. And so folks like myself, if you're a global firm and you want to invest all over the world, it makes sense to partner. And there are many things going on. We've been advising the Nigerian Sovereign Wealth Fund, for instance, on a strategy for this, in terms of its fund allocation strategy and trying to figure out a smart way to get local fund managers and global fund managers to work together. Finally, like I said earlier, encourage local angel investors. Like we can get angel investors to fund companies at the earliest stages and riskier stages and tell them that, look, it's off your taxes, don't worry about it. You know, whether the company wins or loses, you get it off your taxes. I think more people will be incentivized to invest. And these are the guys who are able to unlock local capital. There are a lot of other ideas, including, you know, one of the things that we're working on is a listed venture capital trust product. So think basically a SPAC, but instead of one company, you have like 12 companies and people can invest in these pension funds, the public, anybody can buy shares in this fund. And there are many other different ways of structuring it so that it's possible to unlock capital sources. So to the main matter, you know, in case you're thinking about raising money, here just, you know, what I like to call the 5 commandments for raising capital in 2021, very brief, and I'll just explain. Well, the first law is really, you know, seek ye first the customers and capital shall be added unto you. So I think for me, one of the things that I find with startups who come to talk to me is that, you know, they've not launched a product, they haven't, you know, they don't even have a full sense of who their customer is, but the first thing they want to do is raise money. I usually say, look, do not do that. It's if you can, sure, by all means, but it's usually a waste of your time to talk to investors without having any customers, because investors ultimately will invest in businesses. And without customers, you don't yet have a business. So I'd advise you, please just focus on getting your customers, and then capital will be a lot easier for you to get. The second thing is tell a story that can easily be told. You know, I think a lot of innovators, we don't really have the perspective that most investors are not really investing their own capital. I mean, even in the case of angel investors, you know, even as a very prolific angel, I still have to talk to my wife before I invest. And so it's very good if you can tell a story that can easily be retold. If you can tell a story where it's very easy for somebody to say, oh, this is what this person does, and this is how it's different from what you think, or this is how it's like what you think. Many times you see people say, oh, it's like Uber, but for Suya or whatever. But the reason why they do that is because they have to talk about the company to stakeholders. If they're venture capitalists, they have to talk about it to the people who give them capital. If they're angels, they have to talk about it to their family and their wives. Or, you know, if they're even when they're a group of angels, you know, they have to explain to other people in their life, friends, colleagues, you know, that so make sure you tell a story that's very easy for somebody to tell again. Very, very important. Number 3 is know your stage and live within it. I see a lot of people kind of give fantabulous valuations and want to raise fantabulous amounts of money without really the revenue or operational backing to show it. I mean, if you're trying to raise your seed round and your target is $2 million, that's a bit of a reach, right? Because you don't have any sales, many times you might not have launched, and $2 million is a lot of money. And you got to be thinking, you know, you want to raise $2 million or $10 million valuation, you should at least have some serious experience to be able to do that. It's very rare that a first-time entrepreneur will be accorded that kind of privilege. So that's something you have to think about, right? Know your stage and live within it. Number 4, find the right messenger. Many people oftentimes come cold, and I think it could work, but it's really like wishing on a prayer. If you can find a founder who the investor you're looking to get in touch with has worked with before and possibly even made money for that founder, it makes it a lot different. And there are many ways, like if you don't have the network, you can get the network. And one of the ways to get the network is by working for founders. If you know you're gonna have entrepreneurship in your path, you know, go work for founders, go make friends with founders, go join an early stage, high growth company, and you will be able to, you know, find an introduction to a VC. If you know, talk to founders, be helpful to founders, be engaged in the ecosystem, it really, really helps. And then finally, every no leads you to the yes that matters. I find that a lot of people give up fundraising too early. I mean, when I was raising money for Flutterwave, I remember I pitched about 440 investors. And I think I eventually closed about 107. So if you're not used to hearing no, I look at no's as very clarifying. They just kind of reduce the number of people I have to worry about. So I like to pitch everybody and then close a few, and that's typically how a round works. And it doesn't matter how little money they're giving you, 10K, goes a long way, because 10K from 10 people, that's $100,000. 10K from 100 people, that's $1 million, right? So never look down on any amount of money you're getting. Make it really simple for people to sign up, especially if you're in a space where you don't have an established lead or anything like that. And understand that every no you get leads you to the yes that matters. And then also when you speak to investors, definitely ask them if they can introduce you to other investors, because that also helps grow your list of people you can talk to. And finally, I'll just talk to you a little bit about what Future Africa is doing. So, you know, we set up really in 2015 to angel invest. We weren't intending on making it a financial institution, but we ended up being forced into doing so. And when we started out, you know, in 2015, I just made some money from selling some of my secondaries at Andela, myself and my colleague, and we figured we're single, we didn't have responsibilities, so we're going to invest some of this money in other founders. And so we started to write checks. And thankfully, you know, we wrote about $1.7 million worth of checks out of that fund. And today it's been very, very good to us. We've now grown that fund to about 22 million. Now we're currently in our second fund, which is the Future Africa Fund, which has a slightly different strategy. And we also have, alongside the Future Africa Fund, a sidecar deal by deal fund we call the Collective, where we invite 280 co-investors to invest alongside us on later stage deals or mid-stage deals that come out of our earlier stage investing. So, I mean, basically our goal as a platform is, you know, we want to build a global investor platform, the world's first global investor platform focused on Africa. And essentially we're trying to partner with innovators and ultimately turn Africa's biggest challenge to global business opportunities. I'm glad that Fope is here, because I was wondering when she was going to join us. And so I'm going to stop here and take that as a sign, because I think I've gotten through the best of my presentation. So thank you very much, guys.
Thank you so much, Ian. Please stick around. There's a couple of questions that we're seeing from the audience here that we're going to ask to both you and Fope when this session ends. So please stick around. Thank you so very much for all of that insights. If there's any notes that you didn't manage to get to, please feel free to jot them down and we can get to them later. And I think some of the most important things that you mentioned in your conversation that really stuck with me, Ian, are the 5 commandments of raising capital. The first one being, you say, seek ye first the customer and capital shall be added unto you. A lot of entrepreneurs just want to raise money when they haven't even proven that there is a customer base. So please very, very much note that, everyone in the audience. The second one was optimizing or having a story that is worth telling and is easy for somebody else who's not you to tell to others, because that becomes easier then to share your story among many people. 3 was knowing your stage and where to live within it. And I think that's a very important commandment, Ian, because some of the comments that we're seeing on the chat box really have to say about that, and how, you know, you negotiate how much percentage and investigate, et cetera, et cetera. And I think that commandment 3 really plays a big role with that. And then number 4 was finding the right messenger. And you said if it's somebody within the company who's already made money for the company or that organization, it becomes much, much easier. And the final one was every no leads to a yes. Be patient. I mean, 450 you said, and only
440 investors. Yeah.
Imagine.
And I took $5,000, $10,000 checks.
And see, we're flat away this now, you guys. You know, you get more than $2 billion passing through your hands from that. So that's very key. Thank you so very much. Please do stick around. Keep the questions coming on the chat box. We're going to hear from Ian a little bit later on in the conversation. Next up, we've got an incredible equity investor. Her name is Fope Adelowo. She's amazing. She is one you want to also take your notebook out for and absolutely listen to. You know, in South Africa, for example, where I'm based, they say that only 5 out of 7, or rather 2 out of 7 businesses make it within the first year. And one of the main reasons for that is the lack of funding, of course, amongst many things, many problems that face small businesses. Ian was talking about how it's important for us to raise local money to get people who understand our struggles and how we operate as a continent to invest in us. And I think, Fope, you'll be able to touch on all of those kind of sessions and talk to us about how we can acquire more investments for our businesses. Fope, over to you.
Great. Thank you so much, Ancillar. And E, that was great. It was great to hear from E on his experience as a founder and an investor. And I think that's a very good balance for everyone who's listening today on how to think about raising money and what you need to go to the market with. By way of background, I'm a private equity investor. I work with a fund called Helios Investment Partners. We are one of the largest private equity funds that are focused only on Africa. And that means that we invest in businesses that are Africa-based, founded African, or businesses that generate, a good portion of their revenues from Africa. Personally, I've been involved in a lot of our investments in the tech space. So, we were sort of first non-bank investor into Switch. I've been involved in that company for a while. I sit on the board of that company, which is a payment company in Nigeria. And then we've done a couple of other payment, investments across Africa, from North to South Africa. What I wanted to use this time for is maybe to share some of my thoughts and reactions to some of the points that E made, and then ask him some questions, taking the investor perspective, but also letting E just maybe talk through some of his own experience as a founder as he responds to my questions. Maybe there are 4 key areas that I want to talk about. So one is, how do you think about choosing a lead investor, and what are some of the considerations in approaching the investors? I think 2 is something E talked about, which is the story, the way I think about it is, how do you think about your pitch? What is the balance between the dream and what reality is? The 3rd area is around thinking through something which may be more relevant as you become more mature, which is, how do you think about how much capital is coming in to invest directly into the company for growth, versus taking out, earlier stage investors so that you can clean up your capital, for example. So how do you think about the balance of that when you're fundraising? And then the last one is, how do you court investors? I think Charlie, when he talks through his presentation, he mentioned that, with investors, it's like a marriage and you need to date them before they actually choose you or you choose them. So how do you think about courting them over a longer period to make sure that, you can bring in the right investor? So those are the 4 key areas. And, hopefully this will be a conversation between E and I. But maybe the first point is, around choosing a lead investor, I think, I guess the way to think about it is, there are obviously, different stages of investment. So there's the seed stage, which obviously E with Future Africa is going to be more involved with. You have the Series A, Series B, and onwards. And there are different investors that play, obviously, in those different phases. So I think one of the key things is even understanding which investors would typically play in those spaces and which investors would typically lead investments in those phases. But it's important to still cast your net wide, right? Because sometimes you'll find that an investor that you thought was maybe only Series C onwards might actually be willing to look at investments early on. And clearly that's something that even for Helios we've experienced. People say, oh, we thought you were more later stage, but actually, last year we led a Series B round into a payment company called Tunes. And people don't necessarily know that that's something that you might do. So speak to as many investors as you can and understand what stage they're in. But I think also, as you think through that investor base, I think it's clearly going to be a journey for your fundraising process. So, you're not going to stop at the seed round. You're going to raise a Series A, you maybe raise a Series B, depending on how capital intensive your business is, depending on when you reach profitability, you're going to need multiple rounds. So it's important to think of the journey, even from the get-go. Think about, at different stages, who do I want in my cap table? What do I want it to look like? Which investors do I think can actually support my growth at the various stages that I'm going through? I think I've been very impressed by some investors and some entrepreneurs who come to us, and they've been very thoughtful about the type of investors that they want. So for example, they're asking themselves, well, who has invested in this type of business before in other markets or in Africa? They're asking themselves, which investors have invested in companies that could be potential partners for my business, that could be potential customers for my business. And so those types of investors will clearly have an understanding of your space, of the ecosystem, of the industry that you play in, and so they think through that. The other question to ask yourself is, which investors have actually supported companies in expanding? So if market expansion is one of your key things, think about which investors have invested in companies that have successfully managed to expand beyond their core country of operation. And maybe the last one I would say is, if your ultimate goal is you want to sell your business to a strategic or you want to IPO, think about which investors have invested in businesses that have successfully done that, especially African companies that have successfully IPO'd or been sold to a strategic. So I think those are some of the questions that as an entrepreneur you can ask yourself and helps you actually figure out who to speak with and when. And then I think maybe, one thing which he mentioned, which is true today, is that you have a lot of foreign capital investing in earlier stage businesses. And I think that's great because it's growing the ecosystem. But one thing which we've found is, building a business is never a straight line. And I think in Africa in particular, it's never a straight line. There's like, currency depreciation, there's a regulatory change. There are just lots of bumps along the road. And I think it's important to have investors that really understand that and that can support you across the journey. And, one thing which we do at Helios is we have a operations team who are people who run businesses before, who support our entrepreneurs. And we partner with entrepreneurs and support them. And these are people who can help, in discussions with regulators, et cetera. And so we find that actually a lot of entrepreneurs and even foreign investors, come to us and want to have conversations because, they want their cap table to have someone who has expertise building and investing in businesses in Africa. And so as an entrepreneur, I think it's important to think through what does your cap table look like? Do you have investors who can really bring value to the table in understanding what it takes to build a business in Africa? So maybe with that, actually, I'm just going to pause there and maybe turn over to E with that context. What do you think, E, in terms of building and thinking through the structuring your investor base, structuring your cap table? How should you think about who should be the lead investor in your round? And, how did you approach it when you were going through that process?
Yeah, I mean, the reality on the ground oftentimes is that, investors tend to be herd animals. So very few actually have the conviction to make up their minds. So oftentimes, I said very few, maybe one of them.
Okay.
So what I've learned tends to work in reality is, identify a few prospects who have a track record of investing early in your industry and at your stage, and then reach out to those, right? In every industry, there's always a few. Reach out to them through founders who they've backed before, because that's typically a slam dunk way to get right up through the funnel, or through angel investors who've invested with them before. That's actually another well-trodden path people don't often think about, but it's very useful. And then try to build the rapport to get to a lead investor. But you have to have a few very critical things in the structure down. So the makeup of a round has to have a very clear, how much money do I need to get to the next milestone? And then how much am I willing to give up of my company to get there? You should have a range in mind, right? And then that way, the conversation, the investor sets the terms at the end of the day. That's just the reality. But at least you can be able to have a range of where you're going to end up. And the expectation is that the lead investor, whoever they are, if you have a competition, and typically you could, if you have traction, you pick a lead investor that's most aligned with your goal in that respect. And then once you have the lead investor, typically the rest of the round will come together pretty nicely by reaching out to other investors and so on. But again, getting the lead investors is a critical step in raising capital. Did you hear what I said, Fope?
Great, I heard most of it. Somehow I got kicked into a different breakout room. So anyway,
sorry.
No problem. I caught the last part of what you were saying with respect to making sure that you get the lead investor in place. And I think actually it is it's also a strong signaling effect, right? To your point with the herd mentality. And I think also there's something to be said about where that investor is based, who that investor is, what they've invested in, but also even the balance between a financial investor and a strategic investor as your lead. So those are some of the considerations that one can take into account. But obviously, if you have a strategic in your industry, so big corporate that is investing, one of the things to bear in mind is, does that potentially limit the partnerships that you can have going forward as a business? So, but I completely agree with the points that you made. So thanks for that. I think the other point that you mentioned is the story. It's the tell a story that someone can retell. But as an investor, sometimes the balance that I always try to find is, what is real and what is the dream, and how do you balance that in getting an investor excited about your business? And I think from an investor perspective, yes, I do want to know that there's a large market. I do want to know that there's a large opportunity. But I think the other balance to that is, I want to know that as an entrepreneur, you have a specific view or understanding of the opportunity. So just saying, Africa has 1 billion people, all of those big numbers. I want to understand, for the problem that you're trying to solve, do you have a specific understanding that is unique of that problem, and how is your solution unique in solving that? And I think just balancing that actually from an investor perspective is important, but I also understand that from the entrepreneur perspective, you want to create this big, massive story, but I'll say that there needs to be a balance in that. And then I think even in saying that sort of what the opportunity is, I think sometimes saying what you're not going to do and saying what you're not doing, it can be as powerful as saying what you're doing, because it helps investors frame, exactly where you are. So, it's good to think, especially if, your storyline is the Uber of, trucks or whatever it is. I think if you say that, it's a good opening, it can be a good opening line, but to the extent that there are any differences or things that you're not going to do, especially as relates to our local markets, I think it's important to also put that context. So saying what you're not going to do or what you're not doing can be as powerful, and don't be shy to say that. And I think it really speaks well to an entrepreneur understanding their market and their business and what they're trying to do. I think, we've talked about, he talked about the having the customers, right? Having the customers, and that, the money will come to you. It's so important, right? Because having the customers or some metric, they're good proof points. So if you remember in Charlie's presentation, he said something which I really liked, where he said, in experiments, we trust. And it's true, because when you're an early stage company, you're sort of going along the way and testing new ideas and testing new, distribution models. You're testing lots of different things, and you're testing your hypothesis. And to the extent that you can demonstrate you've thought about what you need to test, you've thought about how to test that in a smart way, and then you're getting results. I think that's, and being able to show that, I think that's quite powerful, and it's a powerful supplement to your story when you're speaking to investors. And I think the third thing I think, which Charlie had mentioned with respect to, I think he had this chart, if you remember, on what are the key success factors for a business. And one of the things he said was team. I think it's like 34%. It contributes about 34% to success. And actually, I'm curious, because part of the story that you tell to an investor is about the team, is that you have people that can execute. Like you mentioned, maybe the person has been a founder before, or they've worked in a high growth startup before. What happens when you don't have your team ready, or the funding that you're going to look out for is to invest in a good team? How does one think about that? How does one think about, do you wait till you find the right team to go to an investor, or do you try and get the money in and tell investors that, look, I'm getting this money in to go to find the right team? What are your thoughts about that? And I'm not sure if E is still with us, because I think people seem to be moving around in the Breakout.
Yeah, thank you for that, Fope. I think it's still around. We're going to certainly pass that question as well forward. I see that the chat section is like going bananas. People are excited about the conversation, and they really want to tap into your brain a lot. And I think one of the main themes generally for the meeting and this event today have something to do with three main things that you've also touched on, understanding your market, understanding your story, understanding your business more than anyone else, knowing where you are and how you where you want to go, because you can't just know where you are and you don't know where you want to go, because you mentioned how important it is so that you can know what stage you need to go to next. Do you want to sell, or do you want to expand, for you to be able to choose the right investor or partner for your business? One of the questions that we have here is really about identifying how somebody or an entrepreneur can know what stage they are in the business. Am I ready for investors? Am I ready for telling the world, or even doing PR? Am I ready for expansion? How does one get to know where they are in the business?
Well, so I think there are lots of, there's a lot of information out there as to whether you're seed or Series A, Series B, Series C. But what I would say is, very sort of high level markers of how to think about it. I think when you're in the seed round, is still an idea. You're still, just trying to build your prototype. You're trying to build your model. You're really just bringing things together. So that's when you're a seed. And there are certain investors that you reach out to, family, friends, and individuals, right? And at that stage, most people are investing because they believe the idea and they believe in you, but not necessarily that the business is fully formed. I think once you start to get to Series A, you've had more time to test the idea. You have some proof points, like I mentioned, and where you want to take the business to in the next phase is to scale it, maybe to build a bigger customer base, maybe to launch new products for the same customer base that you've already been speaking to, that you've already been reaching in your Series A. So that's sort of your Series B. And then Series C, D onwards really is about scale. It's about getting the right team. It's about expansion. It's about launching new products. It's about deepening your product solutions with your customers. In terms of when do you have the big PR, et cetera, look, it varies. And I think it depends on the type of business that you have. In some cases, having the right PR because you are let's say a B2B business can be powerful, because especially when you get an investment from, a high profile investor, I think that can be quite powerful, because to some extent, it gives a stamp of approval, especially when you're dealing with, say, for example, you're in the financial services space, you're dealing with banks, you're dealing with highly regulated entities, you're dealing with people's money, and they want to know they can trust you. So sometimes having the right PR is necessary. Obviously, if you're a customer-focused business, then I think you need to do that. Anything that you can do to acquire customers, I think, becomes important. I think along the way, as you bring in investors, and each business is different, and in different markets, obviously you have to take that into context. But if you have a good investor base that can guide you along the way, and if you don't have that, I think reaching out to advisors, as E mentioned, having this network of founders, either that you've worked with, that you've been introduced to, I think can be quite helpful in thinking through that.
Yeah, and E, how did you know you were ready for investors, say with Flutterwave?
Well, I think for us, we knew we were ready because we had a customer. We knew we were scaling faster than our resources at the time. We knew that there were, that if we had these resources, we could get to the next milestone. And then, we, investors were,
I think we might have lost E there. We will make sure that we get him back, but I think he was just alluding to the fact that they knew their business and they had followed the commandments that he mentioned earlier. They knew who the customer was, and they had acquired the customer to be able to scale their business and look for investors and get the funding that they need to be able to expand. And Fope, while we wait for E to come back, if a potential entrepreneur comes to you for investments, how would you want them to negotiate the percentages? Do they come with like a solid percentage and say minimum 10% or minimum 100% or whatever it is? Like, how do you handle that type of situation?
Look, I think it varies, right? It varies depending on what round you're in and who the investor is and what role you want the investor to play. So obviously, if you bring in a lead investor, in a way they set the terms, you obviously negotiate, and it's a back and forth process. But I think with if you're trying to get on a lead investor because it's a good brand name, it's someone who can support you, they've invested in businesses like yours, you probably need to be a bit more flexible in your negotiation. And then obviously once those terms are set, what tends to happen is the other investors will basically invest according to those terms, typically with some changes at the edges. Look, the reality is that it's always a negotiation. So, investors, there's some entrepreneurs who come to us and say, this is the round, this is our valuation expectation, and this is the percentage we're putting on the table. And it's a little bit like Shark Tank. You go out with what you want, and then the sharks will tell you back, well, this is what I'm going to give you. And you may negotiate a little bit and land somewhere. So I think it's a little bit like that. And some entrepreneurs say, look, here's the business, here's what we've done, here's where we're going to. We know you've invested in this sector. We know that you know what valuations are at this sector, at this stage. You tell us, what your valuation would be for this business. And so you can do that as well and have a conversation with them. I think, the investment, the round dynamics are very interesting. I think, if you're obviously a high growth business doing well, you have lots of investors courting you, maybe you have a bit more negotiating power. If you are not, and let's say you have a shorter runway, you need cash, etc., you obviously have less negotiating power. So I think that's also another factor to bear in mind, is the timing of when you start your round, the timing of when you plan for the next round based on your runway and the cash in the bank. But yeah, it's a negotiation process. It's part of the fun from an investor perspective. That's part of the fun when you're going through these transactions.
Yeah, and knowing your market and where your business is very key for entrepreneurs, right? We lost you there for a little bit, so I'll give you this opportunity to finish what you were talking about when you were talking about your story at Plataway and how you knew when to look for investors.
Yeah, sorry, I got bumped into the talent room. I don't know how that happened, but no, all I was just saying was that, we reached out to a few investors and they were willing to give us money. So I think the easiest way to know is that people are angling to give you money, but then all these other things have to be set, right? You need to know you're on a growth path and that there's some business to be done with the money that you raise. It's not supposed, fundraising is not supposed to make you comfortable.
Yeah,
it's
a good point.
Yeah, definitely. And maybe if you can talk to us a little bit about how entrepreneurs can protect their businesses, because for some reason entrepreneurs feel scared to teach their businesses and tell investors, this is my idea, this is what we're doing, because somebody's going to steal my idea. How do you protect yourself and get comfortable enough to put your business to the investors?
I think you move quickly. I really think that's the only way to protect your business, because the reality is businesses are not going to sign, NDAs and all that. So, I wouldn't sign NDAs. And quite frankly, people can talk about your business anywhere, and you should too. So the only way to protect your business is to really execute with a lot of speed.
Yeah. And do you sign NDAs, or it's also a no-no for you?
No
for me. I never sign NDAs.
I think for me, I would find it strange if if an entrepreneur came up to me, they want to tell me about the business and they tell me they have to sign an NDA first. And I think if you feel like your business is that easy to disrupt or to, copy, then that in itself is sort of a red flag. And so, like he said, the key for you is to execute quickly. And sometimes in a business, realistically, you may have IP that is special, that is interesting, that you want to protect. But there must be a certain level of disclosure that you should have up until that point. And I think when investors go maybe into further diligence, then yes, you can sign an NDA and get under the hood a little bit. But if on the first, an NDA is a non-disclosure agreement, sorry, somebody just put that, which allows, it's an agreement between two parties about confidentiality of information and when that confidential information can be disclosed to other people or disclosed publicly. And typically, when there's sensitive information in a transaction, an investor could sign that with the company or the entrepreneur to make sure, to give the entrepreneur comfort that their information is going to be protected. But I think in the initial discussions, it's very challenging to sort of ask an investor to sign an NDA without sharing some information at least.
Yeah, true. And where is this investment? Earlier I spoke about 1.2 billion that has been invested on the continent already this year. Where can entrepreneurs go and how do they go about looking for investors and finding investors for their businesses?
Well, you know, like I mentioned earlier, and I can perhaps speak to the Nigerian situation, the reality is that a lot of that 1.2 billion is going to a few companies, like they're, you know, high cap rounds in a few companies. So most of it is not very easily available for for seed stage businesses. However, you know, my sense is, you know, there are many places to go these days if you're looking for that seed stage funding, but you really have to go prepared. So, for example, you know, in Nigeria, there's Microtraction, there's Future Africa, there's all sorts of angel groups you can go to raise capital. Lofty Inc. Partners, there's Ingressive, there's TLCom. So there's quite a number of firms you can go to. Same in East Africa. I think what's wise is to, you know, develop friendships with entrepreneurs who have raised capital before, and then ask them to help you. Something else that I think really, really is overlooked, but is a really smart way to go about things, is to apply to global accelerators like Techstars, like Y Combinator. You know, they really do help with providing you with access to capital because they have large groups of investors in their network that will come to the demo days, and they also give you some funding as well. So that's what I would suggest for founders.
And maybe
Awesome.
maybe just to add to that, I think those are excellent ideas. And obviously a program like this will give you access to investors, I think, through some of the various initiatives that they have. But also, you know, back to the point that I made initially about thinking about your fundraising process as a full journey. You know, like you said, there are going to be some earlier stage investors like, you know, Telcom, like you mentioned, Microtraction, Future Africa, for example, that will invest at earlier stage. But, you know, at some point you want to raise larger sums of money. And I think it's important to build relationships, you know, early on with some of these investors as well. So like, is this courting process? How do you engage with them early on? And I think some of that comes again from entrepreneurs who've raised money or spoken to those investors. Some of that comes from your own existing investors, if you have some of them that may have relationships with some of these larger type investors, even, you know, like ourselves. And, you know, one thing which I think it's important for entrepreneurs to remember is sometimes even your next round, the biggest advocates for your next round of funding are your existing investors. So even with them, it's important to keep an open line of communication about how the business is performing, the changes that are happening throughout business, because I think oftentimes, you know, entrepreneurs get money and it's like, okay, until I need to raise money again, I'll come back to you. But actually keeping that open line of communication and ensuring that you're updating them on how things are going, I think is really powerful. And then obviously the other investors that you want to target later on, start building relationships with them. And, you know, you can reach out to them and say, I know this is not your target size of investment, but I want to be able to speak with you in 12 months time, in 18 months time. And, you know, something we do at Helios is where we find entrepreneurs who maybe their business is, you know, too early for us, but we like what they're building. We have a thesis around the sector. You know, we invite them to come and speak to our investment committee and share their story. And the idea there is you start to build relationships with these people. And, you know, at Helios, we're Africans. Everyone there has like an, you know, affinity to Africa in some way, shape, or form. So you never know what connections may even come from there, either partnerships, commercial partnerships, or even investments. So really, I would encourage investors not to forget that actually there is a journey to come, and you can actually start early on building some of these relationships for, you know, investors that you want to approach in a later stage, even though at that point in time they may not be the right investors for you.
Yeah, certainly. And finally, E, maybe if I come to you with this one from Begi Kunene, who was also a Forbes under 13 2015. He says that his question, or rather he's looking for advice. He says that, does one accept investors knocking on the door or continue the organic growth? Because he's in tech, digital marketing, and COVID has helped boost sales, and everything is now becoming super digital. But he wants to know if you should just accept when investors come, or does he just wait?
I think ultimately it depends on what your long-term goals are as a business and as an individual. When you sell equity in your business, it's a very different kind of transaction from say, you know, selling to your customers. Because when your customers pay you, you can do whatever you like with with that money. You can shut down the business tomorrow, you own the business 100%. But the moment you take investors' money, then you're looking for more than just money from them, but more a partnership. So I think the question to ask is, can this investor do more than money for me? Because if you want money, then just focus on your customers. Your customers will give you money, you can do whatever you like with. But if you feel like you need some strategic support to navigate the next phase of your business, then you need an investor.
Yes,
the right kind of investor.
Thank you so much, Ian. I think Becky got answered there. Becky, I hope that your question was answered properly. We just have about 7 or so minutes left in this panel. Any last words from you, E?
For me, I just think, my only words of advice is, what venture capital in particular is really good for, is taking a business area that may be considered a bit risky and ultimately de-risking it significantly enough that it ultimately becomes a profitable business, but one is able to leverage the partnership of investors to make it so, right? So ultimately, that's the part that gets missing with Andela and with Flutterwave. One of the reasons why we took venture capital was because our major clients were other investees of the VCs themselves. And so VCs ended up becoming our most powerful salespeople. And that's why we took the money. But I find that, if you're an entrepreneur today and you're just taking venture capital money because you feel like it's a reward for building a good business, you're likely to regret that decision because you really lose the freedom that having money that you're not accountable to anyone for comes with, and the pressure. You don't really have pressure. So I would really ask entrepreneurs to think carefully about why they're taking venture capital, because it's not really the best option for everybody. And then most importantly, if you're looking to find early stage venture capital, you're looking for a partner that can help you build a big business in an important area where there's an opportunity to turn some of our challenges as a continent to global business opportunities. By all means, please reach out to us at the Fund for Africa's Future. Our website is www.future.africa. Thank you.
Thank you, E. Fope?
Yeah, look, I echo everything that E said. The one thing that I'll add is I'll go back to one of the points around thinking carefully about your story, the proof points, and when you're reaching out to investors. I think that's the most powerful way. If you do decide that you want venture capital money, private equity money, external funding from institutional investors, the best proof point is that you have the metrics to show for it. And they may not be big metrics, but they should be metrics that are proving the thesis that you had and that are growing with, giving the investors some sort of evidence that there is a big market and you have the right solutions to it. And I think just thinking carefully on what that is and thinking carefully on how you're differentiated is very important as you go to investors. So that's the only other thing I'll add. And, like I said, make sure you try and build relationships with different types of investors early on, especially those that get excited about your business, but maybe are not able to invest. Try and, maintain relationships with them.
Yeah, certainly. Thank you so very much. I'd like to take this opportunity to thank both of you. Fope, how can people get a hold of you?
Sorry, say that again.
How can people get a hold of you?
Oh, this is my name on LinkedIn, so people can find me on LinkedIn as a first point of call.
Thank you so very much. This was indeed a very insightful conversation. And I think the main points that both of you touched on is really knowing your story, knowing your business, knowing your market, getting your customers on board first before you start to look for funding. Moving very quickly in this investment in tech space is very important. So thank you so very much for all your time that you brought today and all of your insights. I know that the entrepreneurs on the chat room right now appreciate it. It's been going on fire. It's been bananas there. People have been very excited about your insights. So if you have a moment, just read through and feel free to respond to a few of the comments that we didn't probably manage to get through the conversation and talk to them on the chat. Next up, we also have another powerful conversation. Don't forget that now we are on the breakaway rooms. In another big breakaway room, they're going to be talking about talent and marketing. And now we just finished the investment conversation now.